Hello everyone. I will continue with the rest of chapter 10 in this lecture. So we start with co-insurance. The co-insurance clause in a property insurance contract ensures that the customer has insured the property to a certain percentage of its value. If the co-insurance requirement is not met, then the customer has to share the loss as a co-insurer. So what is the objective of coinsurance? It tries to achieve equity in premium pricing. For example, most customers may go for partial insurance in their insurance policy, partial losses insured in their policy, whereas certain owners may want to go for insurance of total loss. So those who want to insure the total loss, they may have to pay much higher premium. So if the co-insurance requirement is met, those customers who want to insure total or higher percentage of the property, they may get discount in their premiums. Those who do not meet the co-insurance requirement, they will be penalized and forced to share the portion of the losses. For example, there are 2,000 buildings all insured to full value. So in this case, there are 2 total losses and 30 partial losses. So based on this, the premium rate is 25 cents per $100 of insurance. The same 2,000 buildings, if they are insured for half of their value and the same losses occur, 2 total losses and 30 partial losses. In that case, the premium increases. Health insurance policies also have a co-insurance clause. The idea is the customer has to pay over and above the deductible amount and up to a certain limit. After that, the insurer will pay for the medical expenses. This way, the premiums are getting reduced and it also prevents overutilization of policy. The customer has to pay over and above the deductible amount as co-insurance, and they are less incentivized to use the health insurance for their medical expenses. In some cases, individuals or other entities may opt for multiple insurance. That is, they take out insurance from multiple companies. In that case, the other insurance provisions help you prevent profiting from insurance and violating the principle of indemnity. So under the pro rata liability provision, each insurer will share the loss in the percentage of their contribution to the total insurance amount. And under contribution by equal shares, each insurer will pay equally up till the lowest limit of insurance cover. After that, the remaining amount is equally distributed among the remaining insurers. So let's take the example of an individual who has taken $500,000 of insurance, of which 60% is from one insurance company, 20% from another insurance company, and the rest 20% from a third insurance company. So whatever losses happen, the payout happens in the ratio of 60:20:20. That is the share of contribution to the total insured amount. If it is contribution by equal shares, then the loss amount is first equally distributed among all the insurers. In this case, the total amount is 150,000. So it is equally distributed among the 3 companies. Since each will contribute 50,000 and it is within the lowest limit that is 100,000. So the matter is resolved here. Each insurance company ends up paying equal amounts. Now, suppose the amount is higher than the limits of one or more of the insurers. In this case, the amount of insurance is 100,000, 200,000, and 300,000, while the loss is 500,000. So the lowest limit is 100,000. So first 100,000 is assigned to each of the insurers. Then the remaining amount is assigned equally to the insurers which have their limits left. So company A, B, and C first are assigned 100,000 each. Then company A's limit is exhausted, but 200,000 still remain. So that 200,000 is equally assigned to company B and C because their limits are not yet exhausted. So eventually, company A pays 100,000, company B and C pay 200,000 each. This is contribution by equal shares. We also have the concept of primary and excess insurance. Again, multiple insurers providing policy coverage to the same entity. So in this case, the primary insurer pays first. After the primary insurer's limit is exhausted, then the excess insurer will pay the rest of the amount, subject to limits. The concept of coordination of benefits provision is relevant in the case of group health insurance because one person may be covered under multiple health insurance plans. Again, it tries to prevent excess insurance payout and duplication of benefits. So in the case of group health insurance, most states have adopted provisions developed by National Association of Insurance Commissioners. So an employee may be a primary beneficiary in one group health insurance plan and may be a dependent in another group health insurance plan. So the primary the primary health insurance plan will become active first, and then other plans will be applicable. So that's all for chapter 10. Thank you.